Yes, this is a pre-market analysis of 28th of April. So yesterday's market, we have seen you got a gap up as we discussed, and then market went higher. It went to 24,100, which we discussed as a major resistance, and you got a short opportunity there. And then market have fallen almost 120 points. It broke 24,000 once again and came to around 23,980. And from there, it bounced because Reliance was the main driver. Reliance was picking up. So it again went almost 140, 150 point higher, and it made a high of 130, 24, 130. It again broke that resistance of 24, 100 and then closed at 24, 110. So the good thing that we have seen yesterday is you got a close above 24,000 and more importantly, 24, 100. So that's actually positive, right? But today it looks like a 100-point gap down, and we may get a opening just below 24,000. In that case, market will be again under pressure. But if you look at US market, US markets are trading fresh all-time high. South Korean markets are trading at fresh all-time high. Our market is not moving mainly because of rupee depreciation and also FIIs selling. So FIIs are continuously selling, and all those we will be discussing. You look at S&P 500 all-time high. Nasdaq, if you look at it, fresh all-time high. So globally, if you see, markets are now very strong. Iran also came up with some, okay, we are willing for a talk negotiation, and a formula is also proposed. So everything is looking good. So globally, the markets are strong. But if you look at Indian markets, currently, see, 26,300, 400 was all-time high, came to 22,200 during this war and all these uncertainties. And from there, we got a rally of 2,400 points to 24,600, which is almost 50% of whatever fall was there, which is close to 4,000, 200 points. So you got a 50% retracement, 55% retracement. Now it is settling around 24,000 and it may consolidate. If you look at Asian markets, you can see slightly profit booking, but South Korean market is at all-time high. So the global cues are very good, looking positive. But Asian markets, profit booking. Indian market, beyond profit booking, some other issues are like FII selling. That's very huge. And also the rupee is weakening significantly. And IT sector also, there is a distortion which you can see. Major stocks are falling like anything, right? Infosys and Wipro. We have seen something trading at 6-year low, right? So that is not definitely looking good. If you look at this distortion, Infosys in Indian market yesterday, it was positive 1.5%, but US ADR, if you see, 4.5 negative. And in US, normally the tech stocks were trading very positive last day because of good results and everything. So there it is trading negative. So that arbitrage correction anyway will be there. There is a gap of almost 6%. Don't know what exactly the reason. There could be profit booking, there could be selling pressure. So as of now, one sector which is clearly dragging us, IT sector, which is unreliable, or we can say it's very weak. FMCG anyway for almost 1.5, 2 years, it's almost very weak. So what we can expect today is we will be getting a gap down, and it's a April monthly expiry. So the moves will be volatile. There could be short covering also towards the end. So see, you need to capture that rally if you get, clarity that you're going to get a gamma blast. Okay. So only then you need to enter upon the rally. It's not necessary that you need to get from the bottom to the top. Even if the move started after 20% also, you enter, get another 20, 30% and exit. No need to wait for the top also. So something which you need to be very clear about, right? Even if you can capture that, your option premium will double. So why we need to get at the bottom and try to wait till the top? If you're doing that, multiple stop losses will be taken, multiple entries have to be done. But once you get the clarity, like it's breaking VWAP, it's breaking 20 MA, and it started giving that move, which is going to give you a very good short covering, and ATM premiums are going to give you a proper blast, gamma blast. That is when you need to enter, especially on expiry day. Otherwise, you should not even look at the market, post afternoon, unless you're not sure that you're going to get a move on this direction, either a short covering or a massive selling, right? So you will be getting that, and be very well prepared. But don't assume or presume that this can happen and buy call option or put option much before it is going to happen. Only when it starts, then you get that 20, 30, 40% of the move. Get out of it. You don't want the first 20% of the move. You don't want the last 40% of the move also. Get that in between 30, 40%. If you can get that, then you will do consistently good. Okay. So despite global strength, you can see we are going to open weak, and we need to see what is actually happening after the opening, and everything you will have to decide based on that, because we cannot take a view before the market upon the Indian market. We will be looking at the price action, because globally the markets are strong. So if I need to go with global, then our market should have been given a gap up opening, but we are not getting it. So we may chase that on the upside. Since it's a gap down, there may be some buying which can come looking at global scenario, or we need to see whether further weakness is there in the Indian market, and that's reflected upon the price action, and then you look for a short trade on the other side if you get clarity, if you get confirmation. Otherwise, just stay there. Market can go sideways. It's expiry till afternoon. They'll keep it sideways. They'll eat up the premium. And if you're an option seller, you can make big money. If you're an option buyer, you'll get trapped in between. And afternoon, you won't have money also. So just wait. Unless you get some proper confirmation, don't take any trades. And if you would like to learn, if you would like to join us for the live market mentorship, live trading group, then you can get in touch with us. We have the live market mentoring program where we trade live and we teach based on what trades we take. No one else will do that. Okay. So today it's monthly expiry. As I've already told you, we can expect high volatility, and yeah, we have seen some correction phase, right? From 2400 onwards, it came to 23,800 level. So 800 point dip we have seen now. Almost from that, almost you see 300 point have recovered, because you are getting a close about 24,100 yesterday. So 500 point yet to go, right? So there is a space to go. When uncertainty was there, that's when 24,600 has been made. So now clarity is there. Global markets are strong, hitting all-time highs. So there is easy possibility it can go till at least 24,500. So this expiry can range between 24,000 to 24,500. That's what my expectation, right? So apart from that, VIX also have fallen significantly, and because of VIX have fallen, see, at one point out of the money premium also was very high, right? Market is trading at around last week it is trading at around 24,000. So 25,000 call and even 23,000 put, 1,000 points away, which is almost 4%. You are priced at a very high premium. Even when you look for buying a hedge, it was priced at a very good premium, which means markets were expecting 4% kind of move weekly. So that's why that happens. But now that premiums have also came down, VIX have also came down, so premiums have crashed. So market is not expecting that kind of move, which means it is going to consolidate. So what I want you to do is, I'm not showing now, you have to do this exercise yourself, and every time you can do this, look at the straddle, at the money, what premium it is trading, call and put you add, and take that buffer, right? Maybe 50 point, add both together, call and put. Suppose 100 is call and 100 is put, 200 point. That's what you expect on each side. And since 200 point they have collected, they can keep a buffer also of 50 points. So the market crows that 250 point. If it is 100, according to the premium, you need to calculate this. Okay. I'm not showing that because I'm just explaining only, and keep a buffer of 50 points. If that closed, that is when you are going to see that straddle is giving a breakout. So one side move is going to come, otherwise it will be sideways. So now one side move started, get in for the gamma blast, get ready for the gamma blast, capture that and get out of it easily, faster. So neatly you can take a clean trade if you do this, right? So important level again, 24,000 is important. If they're opening below 24,000, if it is above 24,000, what we need to see is whether they're sustaining that, then it can move higher, just like yesterday. So when Nifty crossed the 24,000 during that uncertainty, even then we were becoming so bullish, and it went to 24,600, and you got a correction and it closed below 24,000 and 23,800. That's actually not looking good. That's something which I have seen in the Indian market only, when the global markets are trading very positive. So now, when it comes to expiry, when global markets are strong, our market is weak. We don't know what direction to trade actually. You cannot take a bet by looking at the global market also, because our markets have our own factors, right? So look at the price action, read the price action, and then accordingly, you look for some scalping trades. Don't hold the trade unnecessarily. If you're an option buyer, hold the trade with a proper stop loss as long as possible if you're an option seller, right? So the expected range definitely for this month, next month expiry could be 24,800 to 24,000, 23,500 if there is any uncertainties there. But for today, it could be 24,300 to maybe 23,900. That's what we are looking for. Lots of shorts are still there. PCR, if you see, it's around 0.9, 0.8. So there can be a potential short covering, and get prepared for that as well. So these are the main things that I need to discuss. And of course, crude remain the biggest macro factor. Crude is still very volatile. Keep a watch on the crude oil price also. And crude oil have to fall below 85. That's when market will become even more stable, because we are more, for US, it doesn't matter. They have their own productions and other things. So they are independent, especially in that field. But we are not independent. We have to import, and there is no other option. And unless crude is falling below 85, we will not be comfortable. Trade deficit, current account deficit, and that will add pressure on rupee also. And when rupee is under pressure, FIIs will sell. That will further fuel rupee depreciation. So it's a chain reaction. Right, so everything gets settled only when crude is getting settled. That's what the scenario now. So Nifty, let's see by year end where it can go. Maybe again that all-time high, same level. I don't think that may be possible also, looking at the scenario. So Nifty, I think in that case, it's not giving any returns for the last 2.5 years, right? September 2023, 24 is when we have seen 26,300. And then after 1.5 year, we have seen it is touching again, but again went to 22,200 level. So this is very difficult phase of the market. After this consolidation, we may get a good breakout where it can take Nifty to 30,000, maybe next year, or maybe once these things are settled, once the negotiations, talks are over, crude oil prices coming into normal, FIA started buying, all these favorable scenarios comes, or something. Now we have to wait for the next budget. Maybe something have to come. Then Nifty will give a big rally. So market sentiment, if you see, global is strong, local, some structural issues are there. So it means be very careful, right? If you get a trigger, if you're getting a confirmation that it is going for a short covering, probably post lunch, then you'll get a good trade. Otherwise, it's tricky. Otherwise, it can be just time decay. So the current situation in the war is the blockade is still active. Iran is unable to export oil. So Iran also came up with a proposal for negotiation. If that happens, if blockade is gone, Strait of Hormuz is open, things will get back to normal. So then we'll be doing good. So till then, be very careful. Any news, keep a crude oil chart also open, so that you'll get, even if you're missing the news, that will be reflected on the chart, right? And that will be reflected in our chart also. So even if you are not looking at news, important levels, that range, if you see any candle coming against it, then there should be something. That's how you should be interpreting. So yeah, that's it. See you tomorrow in the next video.